Well, it's nice to see you all here. You know, about a month ago, we had a meeting at the River Cross complex that had about 50, 60 people at it. So that's why it's a little less here this time than about 2 months ago. And with the group usually this small, I kind of want to ask everyone like why they're here, and I can kind of tailor what I'm going to say based on the group of you here. I know Rick is here because he's everywhere on the island, so he's here because it's the place to be tonight. But I'd like to see why each one of you are just here tonight to start us off. Victoria?
To find out about mortgages.
To find out about mortgages, and where do you live?
In Iowa.
Okay.
To find out about mortgages and what the advantage or disadvantage would be for me to do a line of credit kind of thing, HELOC, or straight mortgage.
Okay, HELOC.
Just to learn more about mortgages and all the changes always what I might need in the near future. So.
Okay. All right. Thanks, Steve.
Our building is going to be turning, so I'm for a mortgage.
Good. Okay. Good. Patricia?
Same reason.
Same reason.
Yeah.
Always turning.
Mortgages.
Mortgages.
Building's turning. So
Building's turning. Mortgage. Okay.
exactly like past class.
Yeah. Okay. All right. Great. So, yeah, the nice thing is that using River Cross that example because it turned first, and we've had a really nice relationship with them over there, and one of the things we were able to do is to make a program, specialty program there for that development only. And so Amalgamated has a special HELOC plan just for that complex, and would be able to extend that when your guys' building comes up. The plan is to have it for the Roosevelt Island area. And some of the reasons is one, I mean, we're the only bank on the island, so why wouldn't we be the ones that get into these buildings as they change over? And two, the value or the number of people that lose their places here, it's been a very solid area to live, I guess I could put it that way, as far as foreclosure rates and things like that. And it's just a growing area as well, looked at by the bank. So all those reasons put in place. I mean, for the program we did for the HELOCs, we actually lowered, it was like, our rate was prime plus 2% on our HELOCs. It went down to prime plus 0.5%, and now if you come in and get a free account with Al here, it goes down to prime plus 0.25%. So you can see that they're pretty serious going from prime plus 2
This
down to prime
information that you'll be giving us tonight,
Yes.
is that written down anywhere?
Well,
We take
your name and number, and I'll send it to you. I can send you anything you want tomorrow. And my email's also on my card. So anything specific, you go home, you go on your phone, just email me and I'll send you whatever the parameters you need, because it's a lot to take in. Off the top of the head, I'm just giving the finer points, but it's been a very good program. We've had a lot of people come in for it. They know they've been very busy since the new program started, and we also offer free appraisal to all the mortgages there as well, and we're also working on a program specific to Roosevelt Island properties that's even less interest than everybody else as well. And it's like I said, it's for the community's sake, it's for the only bank here, being the bank of the market, and it's also because it's a safer place to lend than a lot of places, because it's been consistently, the properties have kept its value. Look where you are, look at your view. So it's been nice like that. Yes?
You said it's prime plus 0.25, and now you said it's less interest than usual. Isn't prime the usual?
For that product?
The normal on a home equity right now has been prime plus 2.
Okay.
What we've managed to do is lower that to prime plus 0.5, meaning which would be about 5 and 5 1/4, right?
Yeah. Doing my research now, Chase is about prime plus 0.75 if you're the best. If you have the best credit, the best everything, that's where their lines are at now too. We looked at different places and saw what the lines are at. It's also the other four, just to show an example too, the other bank, NCB, that's in Rivercross, their line is prime plus 1%. So everyone had to get, their line was prime plus 1%, and now we're prime plus 0.25%. So that's.
So which is prime?
Well, prime is,
Seven.
prime right now is 3.25.
Yeah.
Okay.
That is low.
It's
That is
low.
low.
It's actually been that for about the last 6 years. You notice the economy's been a little sluggish. That's the low. 3.25 will be the lowest that it goes, and that's why it stayed that low. The real reason is that the rate they use for banks to borrow money from each other is the prime rate minus 3%. So if we wanted to borrow money from another bank, we're getting charged like 0.25% interest, and we can't make it any less than that because then banks would borrow each other for zero. I see a couple people shaking their heads. Yeah, banks would borrow for zero. You can't say, hey, borrow money and you give me money, extra money too. So that it's been that way for about 5-6 years now. Okay, so that's yes.
I don't understand. It's 3.25 and then you said it was
Plus,
five
it'll be
and
plus a quarter.
No, no, no.
7.5. So how do I?
Okay, here's what it would be, just to explain. It's whatever the prime rate is, with getting a bank account, it'd be a quarter more than prime rate. So right now, the prime rate is 3.25%. The rate you would pay on your home equity line of credit, that would be 3.5%.
But why did you say?
No, what I was mentioning is the 5 1/4 was if you
Oh,
paid prime plus
if you,
2.
if
Oh,
you had a place on Long Island and you came to us,
Oh, I see.
the rate would be like 5.2. But here at Rivercross, it'd be 3.5. So that's just showing the difference of the value here.
Just to make this completely clear, that rate is for what, 6 months?
No.
On a
It's
HELOC.
not, it's not the teaser rate. It's not a rate that just starts,
What is-
that's the rate for the whole 10 years.
So it's a fixed rate.
Well, it's not a fixed rate. It's prime plus a quarter for the whole time. Because a lot of times you come out with products that are, like 6 months, they're like a teaser, a rate that starts.
Tax on prime rate.
Yeah, I mean, so 6 months at X, and then after that it adjusts.
So what you're saying, this is the prime rate for how many years plus a quarter?
10, the whole
Now,
time.
Did you also have another product that was 20 years?
No, I think it's confused because it's the first 10 years is the block period and it's 25
Oh,
years.
Yeah, well,
That's what I'm talking about.
yeah, it's the
10
same, this is
It's
the
the
same.
same product.
Yeah,
It's-
it's the same thing, when it's
So
done.
what happens after 10, you go to whatever the prime is?
After 10, whatever's left goes into like a mortgage for, right now it's for 15 years, I believe, yeah.
And whatever that rate is.
Yeah, it's the same thing,
It's still going to be prime plus a quarter.
it's still gonna be, it's still gonna be the same rate, but it's gonna be, you have to pay principal and interest.
But,
for that.
but at the 10th year or the 15th year, I don't know, you're gonna look and see what the prime is on that date, 10 years from, or
Yes, the
15 years
prime,
from now.
if the prime changes after 5 years, say it goes to 4%, then also you're going to pay 4.25, prime plus a quarter.
Right, at the end of
Yes.
10 years.
Yes.
So it's fixed for 10 years.
No.
It's prime plus a quarter. The prime is not fixed. The prime is, like he said, it's I should say.
Well, I'll explain it, yeah. Basically, the prime rate is set by, there's heads of 12 different banks that meet and set what this rate should be. It's been at 3.25 for the last 6 years. What it does, it affects a lot of things. It affects what people pay on credit cards, prime plus 9.9%. It's basically a tool that the banks and government uses based on the economy to slow it down or speed it up. Okay, they meet about 10 times a year. These bank heads, and they haven't changed it in that long time. Okay, but that it could go. It will go up. Sometime in the future. So it's not
So it's not going to be
fixed.
3.25 every year for 10 years. It's
No.
gonna go up as soon as
Right,
the prime
it can,
goes up.
yes, it's tied to the prime, yes.
It's always tied to the prime. So
Right.
if it changes next month, it's gonna change with it.
So do you have a fixed, mortgage product?
We have fixed mortgage products too, yeah, that's what you were mentioning. And the nice thing about the you know, I know some of, you guys in, will be co-ops or condos?
Co-op.
Co-ops, okay. Well, that's great, because the closing costs on co-op mortgages is so much less than condos. And the main reason why is that co-ops don't have New York State mortgage tax. And in this area, or all in New York City and the boroughs, is 1.8% of the mortgage. So if you think about it, and you do the math, it's like, if you took out a mortgage for $400,000, 1.8%, boy, that's $7,200 just going to mortgage tax. Where when you buy your own co-op, there is no mortgage tax, because technically you're buying shares and they can't tax it as, they actually tried to. There was a bill in Congress that did, that in the beginning of the year, that stalled, that they were trying to tax you guys too. But fortunately for you,
It's still a problem.
There was problems with it because of that's just getting a little too technical, but there was problems with it. People didn't close the loan. It was hard to, you took their money. So it's been fought, but just for what we need to know, there's a lot less costs, where it usually will cost you like less than $3,000 total, closing costs, where it's, so
what's
much more in
the
there.
fixed rate?
The fixed rate right now on a 30-year mortgage is 4.125. It's been going back, and it actually went up yesterday. It was at 4 yesterday, it went up to 4.125. But we've been between 4 and 4.125.
And that 4 point is plus the prime.
No. On the mortgage, it's fixed.
Okay.
Fixed, 30-year fixed,
4.1.
4% or 4.1. It's 4 1/8 today. That's fixed for the whole 30 years. I'll give you some more in a second.
What is your charge to take out a HELOC? The administrative fee, whatever you call it?
The total charge is, I guess about, 49 is the total cost. I'm saying the total cost for everything. It's under $1,000. I'll get you exact. I'll send it to you exactly, because I don't want to. Because I think that was the. Yeah, something like like he's thinking 944. I'm thinking somewhere in the 800, 900
And
range total.
you pay that up front, and you only get involved in anything when you start taking money on the HELOC.
Correct. It's like a big credit card on your property. You only pay on what we have, and there's no minimum draw, right? So if you say, hey, I might need it in 3 years, you can get it now. If you're going to retire soon, you might want to open one up now, just in case you need some money, down the line. The places you have lived have grown so exponentially in the value. You talk to the people that moved into some of these places, and what it is down the road. We have one in now that's like a $400,000 loan. The place was worth like 1.2 million. I think the appraisal came back in Rivercross, something like that. So, and there are a couple that, they don't know if they'll need it or not. They have like 13 grandkids or something like that. They might be for, they don't know what it is, but it's for like emergencies, and they had some of that for the future. And just to answer, HELOC. HELOC is the same thing as home equity line of credit. That's it's like a acronym. The other fixed rates, our 15-year mortgage is 3.125. So if you're taking out like a loan that's a little bit smaller, that's really nice, and the 20-year is at 3.875. We also have loans that stay fixed for a certain amount of period and then change. One person that's buying in the Rivercross now, they're taking out a 10-1 ARM loan because it's him and his wife, but when they have kids, they know eventually they'll move out. So for the next 10 years, instead of paying like the 4.125 rate, they're going to pay 3.375. It's like 3/4 of a point less. So for 10 years in a row, it's going to be that. And then after that, it can adjust up or down based on like market conditions.